As we near the end of another rough month for the market, we're finding some real bright spots, but in the most unlikely places. Bright spots like FedEx, which has seen its stock surge 21% from its lows just a couple of weeks ago. Now, if you told me a month ago that FedEx would help lead us out of the depths of despair, well, I would have been extremely skeptical. Ever since it peaked almost exactly a year ago, this stock has become, let's call it, total dog. FedEx topped out at just under $305 in June of last year, and it spent most of the next 12 months working its way lower before finding a bottom under $200 this spring. For the last few months, it's been repeatedly bouncing off the 190s to 200 level, and it's easy to understand why this thing's been such a poor performer. FedEx has been struggling with snarled supply chains, rapidly rising labor costs. At the same time, the great reopening of the U.S. economy meant consumers pivoted away from e-commerce, causing the whole freight complex to take it. Remember, they wanted to go out again. Plus, they were up against some very tough year-over-year comparisons because business was booming during the darkest days of the pandemic, before the bulk of the population got vaccinated. But this month, FedEx has made a number of announcements, including a widely praised quarter last Thursday, and now the stock has jumped from 201 to 240 in just 2 weeks. So how the heck did they turn things around? And more importantly, could the stock have more room to run? First, you got to understand where the company's coming from. Before COVID hit, FedEx was struggling. 2008 to 2019 were not good years to these guys. Suboptimal execution, the ill-fated acquisition of TNT Express in Europe, the Trump administration's trade war, repeated failures during the all-important holiday season. Then the pandemic came along, and the initial COVID crash, Wall Street realized that e-commerce could explode. Given that hundreds of millions of people were stuck at home, the only safe place to shop was the internet, and somebody has to deliver those packages. By the end of 2020, FedEx was charging to near new all-time highs, and the stock kept running through the first half of 2021.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.